Yeah, 20 years ago, I was here like this guy and on the picture. I was too young to drive a truck or forklift, but I was packing these products. In this video, I will show you who is selling these products, and the stock is all-time low, and that's why I'm showing it to you. There's no content on this one yet on YouTube, I think. Is the market wrong again? Because the company is one of the best in the market selling these products for the building industry here. And I know that the industry is struggling, at least up in the Nordics here. Many construction companies or those who are building buildings are struggling. But I think this one, which is Rockwool, is just doing better and better. I see that the revenues have at least doubled over 10 years, and I see historically that operating income has been growing more than that, 3x in 10 years. I see also that the management is starting to buy back shares at record low prices. And it's just it's funny because good investing is really boring, and what is more boring than Rockwool insulating products for the building business? But cash is cash, and dividends is I don't matter so much where the dividends are coming from. If you look, I came across this one in the screener of Fiscal. Feel free to use the affiliate link and support more research like this and keep it going. And then I came across this looking at the screener, just high dividend growth over 5 years and 10 years, really high dividend growth, and they don't have any debt, negative net debt. And I just it's just stumbled upon this 4-5 billion Danish krones in operating profit, and we can just go and buy all the shares in the market now at 40 billion. So that's like seems really cheap for a company growing, just growing and growing. And of course, if somebody wants to buy the entire business, it will probably be just pushing the price up. But we who are small investors can just take advantage of these wild price swings because the fundamentals look great. And if you look at the financials, it just looks really, really great. So if you don't know Rockwool, you can have a look in Gemini and ask what is the products, why are they important, and start a factory tour inside the dynamic view of Gemini. So these products are just simple, just well at insulating the buildings, making it for audible insulation also. I mean, they make the walls better and energy efficient. And when I was in the warehouse 20 years ago packing these products, I think they are just the same as they were back then. And I know that we have a competitor in Norway, Glava, is the name, and they seems like they have a very, very good business, boring business maybe, but the CEO and the management here is looking optimistically at the future. But yeah, the business of building housing, etc., is maybe struggling. But the producer, they are very optimistic, and they are investing for growth and into more more carbon neutral or sustainable buildings, for example. And they are investing for growth, and we see it in the numbers. For those who are more into the cash flow statement, here you can see that roughly half of the cash is going to capex, but they are actually giving explicitly what the maintenance capex is, and it's not far from 200 million euros, and that's they have a lot of the capex going into growth, and I think that it's a good value for the owners having a profitable growth there. Actually, they have 42 factories and in 23 countries, and they are selling their products in more than half of the world. It's a world leader with local presence. And I don't know so much about the competition, but you can have a look here. and see in the industry segment here, and you see the market cap of the competition, but I don't recognize anyone who are just making insulating products. But I don't know the competition so well. But you see also that who have the best margins, and you see Rockwool is all the way at the top with 16% operating margin, which is really, really strong. And the purchase multiple here is the lowest it has been ever, roughly. And it has been having growth. When I look at companies all the time, I really like to have debt-free companies that grow their earnings more than 12% a year, or 12%, threefold in 10 years, and 12% annually. And then buying those shares, buying into the business at a record low multiple when you buy it. So I'm just very curious, and maybe I have a variant perception of this, but I don't understand why is the market trading these shares so cheaply. So I would have a look into the annual report, but I don't. It looks like it's just going really well. Of course, in good years and in bad years, of course, the earnings can drop a little bit. But if you look at the long trend, I don't understand why is the market selling these shares so cheaply. You see the EBIT margin. You see it's really high, 5 billion in 2024 numbers, and roughly the same in so far in 2025. And the profit is really high compared to the sales. It's just a wonderful business looking at the numbers and the growth. Profitable, and equity, return on equity is really high, and all of it is tangible equity capital, I believe. Let's have a look. You see here the maintenance capex on the bottom right. It's just roughly half of the capex. So of course they need to maintain the production facilities. Let's say 600 million in cash from operations, or more, 800 million maybe, and then deduct 200 million to maintenance capex, and I believe the rest is value for the owners. We have profitable growth at the return on invested capital, really, really high and growing. Revenue is increasing pretty good, and EBIT is really high and growing, and the margins are great. So I don't understand why are investors selling it so cheaply. I may be wrong about the growth, but I feel I understand the products. You can put a pause on the video here and see what the management is saying about the pinnacle of Rockwool strategy. And yeah, unifying nature. They're using some materials. I believe it's some kind of volcanic material here, and then using it as insulation. And there are some interesting companies. I've seen some other companies making building blocks and bricks out of volcanic ash. So it has a really good insulating effects, and that's really interesting. It's for us guys, engineers, 35 plus. So I think it's fun to see businesses that we can kind of understand. We see the numbers are going up and to the right, and they have no debt. So they pay dividends, and they pay the shareholders back in form of repurchases also. So if you have a look at just graphically, you see the yellow line here is the all-time low purchase multiple, close to 8 here now. So that's always interesting. We like to buy good businesses when they are selling cheaply in the stock exchange, in the stock market, which is not a stock market, but it's a market of stocks. And here you see cash from operations, 600 plus million. Let's deduct the 200 million from maintenance capex, and we see that the difference is roughly what the shareholders are getting. Dividends and repurchases actually the last 2 years. And if you look, it's a bit funny to see that the management started to buy back shares when it was like really booming, the stock price, and the multiple was really high. And then, we did a mistake maybe, and then the multiple went low for a few years, and then now they start buying back again. So we see that the trend of the shares outstanding is lowering now. So let's hope management is rational and using this as an opportunity to buy back some cheap shares also if they can't invest everything in very, very profitable growth. All right, dividends per share and earnings per share. Let's have a look just at the long-term view. It is a debt-free company right now, according to third quarter of 2025. Earnings per share, roughly 2 euros. Dividends, roughly half. Repurchases in addition, so it looks sustainable and growing. I don't understand what's the wrong, or it's not always the market is correct. You see the equity of the business is strong. They don't have any debt really. You see the equity is just growing nicely. 3x in 10 years, and they invested in profitable assets. So it just looks wonderful. And no net debt. And what I also like is if you have a look at the goodwill and the intangibles. Warren Buffett, in his letters, he writes over and over again that his best businesses are those that have high returns on tangible equity capital. For those fanatic investors that read about these kind of boring things all the time, you will see that this has been historically how Warren Buffett and Berkshire Hathaway looked at businesses that grow. And you see here on the balance sheet, it's like 200 million in intangibles, and the equity is 300. That means that the net tangible equity capital is they reinvested to real assets here, machines and production, and it's really, really profitable. Here you see a big chunk, 600 million cash generation per year, and an equity capital of 3 billion. So that's a very good ratio. I really like the numbers, and I don't understand the investors always. But I also know that they're wrong all the time, because you can see the best companies, the most stable companies, even those making such great products as Gemini, for example, even those vary widely in the investors' perception and in the stock prices. So I think that our opportunity as small investors is to benefit from other people doing dumb things, maybe. Often very big institutional funds just selling because it's not fitting their portfolio, or I don't know why, but group thinking, not thinking independently. And there lies our opportunity. So I hope you like that. That's a dividend-paying stock that seems to be growing and very, very cheap, all-time cheap now. So not investment advice. Hope you like the video. Give a thumbs up if this is something new and something to look and read about. I will share a link down below if you want to use this stock market terminal yourself and find a screener with in front of you. You have some similar companies, growing dividends, little debt. It helps to fish where the fish are. I don't understand always why they are trading cheaply, but at least this was a business I hope you can understand. And if the price is dropping more, you understand maybe that the business is actually earning something that you're imagining it will earn in the future. So thank you for watching the video until now. I hope to see you in the next one.